Income Tax 2020. Tax software example, Savor's credit, retirement savings contribution credit. Come in, relax with Income Tax 2020. Here we are in our Lacerte tax software. You don't need the Lacerte tax software to follow along, although I do think they have a 30-day free trial. So if you can get access to a demo version or promotional version of it, it could be a useful tool to practice with. We're going to be focusing in on the Form 1040 and the Savor's credit, jumping back and forth from the data input to the form so we could run different scenarios. The tax software helping us to do so. We're here at the 1040 for our starting point, single filer, Eric Smith, living in Beverly Hills, 90210. We've got then the $100,000 for the W-2 wages, $12,400 standard deduction, bringing us to the $87,600 for the taxable income. Page 2 then is where we're going to have the tax calculated, and this is where we're going to see the credits, of course. Now, he's way above the income threshold to get any credit that for the Savor's credit we're looking at, so we'll just check that out first, and then we'll go back in and lower and make some changes to it. So let's go back on over. I'm going to say, okay, let's say now that he puts money into an IRA. We're going to max out the IRA contribution. Maxing out the IRA contribution here. Then on Schedule 1, he put $6,000 into the IRA. So there's our IRA on page 1 of the 1040 now. We've got the $6,000 here. And that changes the adjusted gross income because that's an above the line deduction. That brings our taxable income to the $81,600. And then page 2, we don't have any credit still because once again, of course, he's over the threshold. Let's make some changes. Let's actually change the marital status now and say he's married now so that we have a little bit higher of a cap. We got our table here showing us basically our income thresholds for the 50%, 20%, 10%, and so forth. So let's go to married here. We're going to say, let's go back on over and say that we're going to be married now. So Eric got married again to Jane. And so now, and let's go to the income now. Let's go to the income and we'll adjust the wages to, let's say, 38,000. So we'll say 38,000 on the wages and then back on over to the forms then. So now married, filing joint. So congratulations. So we got 38,000. We still have the 6,000 that's being contributed here. That's going to give us the 32,000 for the adjusted gross income. And then the standard deduction is now 24,800, bringing the taxable income to 7,200. Then on page 2, we've got the 723 as the tax, and then our credits basically being capped out because it's going to be capped out at the tax rate. So in other words, if I go then to form, let's go to Schedule 3. That's coming from Schedule 3. So there's our retirement saving contribution credit, Form 8880. There's the 723. If I go then to Form 8880, there's going to be our 6,000. It's basically the max contribution to get the benefit would be the 2,000, and then that would be the 2,000 of which we can get 1,000, but then it was capped at the 732. Let's increase the income threshold to kind of like the upper limit. Let's bring it up to 64,000. Let's go to 64,000 on the income. So let's bring this up to 64,000. And then if I go back on over, now we're going to say, all right, now we've got the 6,000 above the line deduction. That brings the adjusted gross income down here again, 24,800 for the standard deduction, 33,200 for the taxable income. Tax now calculated at the 3,592, and then we have the credit of 200, which is coming from Schedule 3. Here it is on Schedule 3. There's the 200 coming from Form 8880, going to Form 8880. We now have, once again, the 6,000, which basically got capped out at the 2,000 for the max contribution that the credit can be calculated upon. Then we have the 2,000 times the 0.1, and then it reduced it basically on the income limitations based on the income levels to only getting 10% of it, as you can see in our threshold here. So now we're getting that 10%, and that's only the 200. So the 200 is now what's flowing through basically to the first page of the 1040. Now, what if we had both spouse put in money? If I go back on over and say, okay, well, what if we had the income being put in for the credit. Where is my credit? Adjustments. Adjustments. Spouse puts in 6,000 as well. Or before I do that, just note that we could put a maximum of 2,000 in and still get that same amount of the credit. So there's 2,000 that was put in instead of 6,000 into the IRA. So now we got the 37.2. If I then go to page 2, that's not page 2. Page 2, we are at the same 200. So we have that same 200 here. And if I go to form 888, there's the 2,000. See, it capped it at that 2,000. If I go under 2,000, that's when the amount of the credit will start to go down. So if I put it at like 1,000, then I say, okay, now it's at 1,000. So now that's a lower amount here. And now we're only getting $100 on the credit. Now, we could adjust the income level here, which is putting 1,000 in, possibly. If we said, if I only put 1,000 in, and then I adjust my income level and see if we can get the income level right so that we can get we don't hit the cap on the liability cap. So let's make the income, try to hit the 20% area. Let's make it 41,000. So let's say the income is 41,000. And then we're going to say, okay, 41,000, we put 1,000 into the IRA. So there's the 1,000 into the IRA. Then we go to page 2. We have the 1,523, and it's still calculating at the 200. Oh, that makes sense. 200 now. So then if I go then to the 8880, we've got the 1,000 now times the 20% because of our income thresholds, as we can see here. So we're in kind of this category now for the married filing jointly. So you could see how those percentages basically will play out. Now, we could have both spouses put money into the IRA. So what if that happened? If we say, okay, what if both of them let's say they both put 2,000 in to max it out. They both put 2,000 to max out, not the IRA deduction, not to max out the IRA deduction. They could put more than that in to max out the IRA, but to try to max out this credit, we'll put 2,000 in both. So now we got you and spouse having the 2,000, and that adds up to the 4,000 times the 0.5 now. And so we're getting the 2,000, and then it's capped off because of the liability that's being capped now. Now, again, if they both put in the full amount, 6,000, then it's going to cap them off at 2,000 each. So it's still going to cap them off at that 2,000 each, which is still the 4,000 at the 50% to 2,000. And then it's been reduced here. Notice the bottom line is being reduced. Why? Because by putting in the 6,000, I changed the adjusted gross income. So now we have the 12,000 total, which is a big deduction, taking the adjusted gross income down to 29,000, and then the standard deduction at the 24,800 to bring the amount down to 4,002. So our tax liability is much smaller, and that's going to limit, of course, the credit that can be applied. Now, we can also have this if I go back on over and say, okay, what if they don't have an IRA, but they got like a 401k plan, and they put money into the 401k plan? So we can say, all right, so now they got their 401k plan. I'm going to call it down here. We're going to say this is going to be a 401k plan. So same kind of concept now, but now it's going through work instead of like the IRA. And this is something that would be on the W-2. So you'd get the W-2, it would be planned there, it'd be shown there. And if you put it into the forms correctly, into your data input, making sure that you pick up the item on box 12 of the W-2, then it should calculate your credit for you when applicable. So then I can go back on over here, 1040 page 2. We then have our $400 being calculated here. That is coming from the Schedule 3. So there it is, and that's coming from Form 8880. Form 8880, there's the 2,000, there's the 2,000. We're at the 20% threshold. That brings it to the $400, and that we're not being limited by the liability. So we get the $400 that pulled on over to the Form 1040 page 2.